tired of feeling left out of the stock market conversation? Do you want to start investing in stocks but don't know where to begin? Well, you're in luck because in this video, we're going to give you a step-by-step guide on how to start investing in stocks the right way in 2023. We know that the stock market can be intimidating, but it doesn't have to be. In this video, we'll break down the basics of stock investing and show you how to set a budget, create a diversified portfolio, and monitor the stock market like a pro. We'll also be providing you with our top tips and tricks to help you navigate the market, and we'll be giving you the information you need to make informed investment decisions. So whether you're a complete beginner or just looking to brush up on your skills, this video is for you. So if you're ready to take control of your financial future and start investing in stocks, make sure to watch this video until the end. Trust us, you won't want to miss it. Setting a budget. Now that you understand the importance of investing in stocks, let's talk about one of the most crucial steps of the process, setting a budget. Before you start investing, it's essential to have a clear understanding of how much money you have to invest. Creating a budget is a great way to get a clear picture of your finances. You can start by listing out all your weekly income and expenses, and add their totals together. This will give you an idea of how much money you have available to invest in stocks. But it's not just about having money to invest, it's also important to have an emergency fund in place. This is especially important during uncertain times in the economy. An emergency fund is an amount of money kept somewhere that can be accessed at any time, such as a savings account. It's recommended to have enough money to cover 3 to 6 months' worth of expenses. This will give you peace of mind knowing you have a safety net in case of any unexpected events. And once you have your emergency fund in place, you can start allocating money towards your stock investments. By following these budgeting tips, you'll be able to invest in stocks with confidence, knowing that you have a plan in place for both the short and long term. Creating a diversified portfolio. Now that you've set a budget and have money allocated for investing in stocks, it's time to think about creating a diversified portfolio. Diversification is key when investing in stocks, and it's all about spreading your investment across different stocks, sectors, and industries. This helps to reduce the risk of losing all your money if one stock or sector performs poorly. There are several types of stocks you can consider investing in, such as blue-chip stocks, value stocks, and growth stocks. Blue-chip stocks are well-established companies that have a history of consistent growth and pay dividends. Value stocks are companies that are undervalued by the market, and growth stocks are companies that are expected to grow at a faster rate than the market. In addition to diversifying across different types of stocks, it's also important to diversify across different sectors and industries. This means not putting all your money in one industry, such as technology, but instead spreading it across different sectors like healthcare, finance, and consumer goods. By creating a diversified portfolio, you'll be able to spread out the risk and increase your chances of earning a return on your investment. It's important to remember that diversification doesn't guarantee a profit or protect against loss, but it's a key strategy to manage risk in your portfolio. Monitoring the stock market. Now that you have a budget and a diversified portfolio in place, it's important to stay informed and monitor the stock market. The stock market is constantly changing, and it's important to stay up to date with current events that may affect stock prices. One way to stay informed is by researching and analyzing stocks before investing. This includes looking at a company's financial statements, such as their income statement and balance sheet, as well as reading news articles and analyst reports. This will give you a better understanding of a company's performance and potential for growth. Another important aspect of monitoring the stock market is having a long-term investment horizon. It's important to remember that the stock market can be volatile in the short term, but over the long term, it has historically provided solid returns. It's important to avoid the temptation of short-term speculation, which is buying and selling stocks based on short-term market fluctuations. This often leads to poor investment decisions and can result in significant losses. By monitoring the stock market and staying informed, you'll be able to make informed investment decisions and have a better understanding of the potential risks and rewards associated with investing in stocks. Remember, successful investing takes patience, discipline, and a long-term perspective. Consult with an expert. As you begin your journey in stock investing, it's important to remember that you don't have to go it alone. Consulting with a financial advisor can be extremely valuable, especially if you're new to the stock market or have limited investment experience. A financial advisor can help you understand the different types of stocks, the risks and rewards associated with investing, and how to create a diversified portfolio that aligns with your investment goals and risk tolerance. It's important to note that not all financial advisors are created equal. It's essential to find an advisor who is a good fit for you and your financial situation. You can start by asking for referrals from friends or family, or by doing research online. Make sure to check the advisor's credentials, such as their education and experience in the investment industry. Consulting with a financial advisor can be a great way to gain knowledge and confidence in your investment decisions. It can also help you stay on track and avoid common mistakes that new investors often make. So if you're not familiar with the stock market or investment, consider seeking the help of a financial advisor as you begin your journey in stock investing. In conclusion, investing in stocks can be a great way to grow your money over time, but it's important to understand the basics before diving in. We've covered the importance of setting a budget, creating a diversified portfolio, and monitoring the stock market. By following these steps, you'll be well on your way to becoming a successful stock investor. We hope that this video has provided you with the knowledge and tools you need to start investing in stocks with confidence. Remember, investing in stocks is a long-term commitment, and it's important to be patient and disciplined. It's also important to continue learning and staying informed about the stock market. Keep an eye on current events, read financial news and analysis, and consider seeking advice from a financial advisor. Investing in the stock market can be a great way to grow your money over time, but it's important to remember that investing always carries some level of risk. It's crucial to have a well-thought-out plan and do your research before investing. We encourage you to take action and start investing in stocks today. Remember, the earlier you start, the more time your money has to grow. And as you gain more experience, you'll become more confident in your investment decisions. Thank you for watching, and we hope that this video has been helpful in your journey to becoming a successful stock investor. If you want more information and want to learn more about stock investing, be sure to check our other videos as well. Don't forget to like and subscribe to our channel for more informative videos on stock investing and other financial topics. We appreciate your support and look forward to providing you with more valuable content in the future. Thanks again for watching and happy investing!